Is Google a buy after Microsoft's investment in ChatGPT? There's been a lot of hype around this lately, so we're going to dive deep into this today and work out how this affects Google and whether Google stock is a good buy at these levels. We're looking here at the screen at what Google.com looked like back in 1999. Some of you may remember when just after it came out. This is using the Wayback Machine, and some of you may also remember this was Yahoo.com, who were the absolute dominant search engine back then, and I think right up until about 2003 or so when Google took over. And there's a whole bunch of others like Excite, Lycos, and Seek were around there too. So Google definitely wasn't the first to search, just like they may not be ahead with ChatGPT right now. And they weren't the first with a lot of things. They weren't the first to email. Gmail now dominates. They actually bought YouTube, and what some say was the most successful commercial acquisition in history. So the question is, can they win the upcoming AI war? So that's what we're going to look at today. We're going to go over a 5-step process. But first, we're going to look at all the recent news that's come out on the stock. We're going to look at what Wall Street analysts think about it and quantitative ratings. We're going to look at what company insiders and hedge funds have been doing in the stock. Then we're going to dive deep into the charts and perform some technical analysis so we can see what the most important price levels are. And then stay towards the end of this video. I'll give you my final rating and price target on Google. Okay, so getting into it, we're going to use Seeking Alpha to perform our fundamental research. For those of you who don't have it, it is definitely the best platform for research and data and information on stocks. I've got a link down below in this description, and you sign up with my link, you get a 7-day trial and a discount if you decide to upgrade. So take advantage of that if you're interested. Okay, so Google was currently sitting at 1.2 trillion market cap, and just scrolling through, we can see they've got 190,000 employees. And we'll look at some of the things that have come out. The biggest thing over the last week or two has been, the ChatGPT and their answer to that, Bard. So we'll look at that more closely. So Google CEO tells employees some of the company's top products were not first to market as AI pressure mounts. So Sundar Pichai sent a company-wide email telling employees to spend a few hours testing Bard. You got a bit of criticism of it. They did do a mistake in their launch, and the market really didn't like that, which we'll get into a bit. But you can see here on the price action back earlier this month that it sold off quite sharply after that presentation. So let's just come back to that in a bit. We'll just go through a bit of other data and news out in the stock. This is showing Google's most recent market share. You can see globally they've got 92% market share. So they have been the dominant in search for quite some time. You can see Bing's only at 3% market share. Now, if we go to United States only, they don't have quite as much. It's 88% and 6%, but still very, very dominant. And it's been like this now for almost 20 years. So, it could be time for disruption, and, competition's definitely on the way. Their last Q4 actually came in a bit weaker than expected. While overall revenue grew, advertising revenue fell by nearly 4%, and revenue at YouTube declined 8% year over year. That spooked investors a bit with the stock trading down after hours. They've laid off 12,000 jobs, which has been the trend in the tech industry. So they're trying to tighten up their costs going forward and get a bit more lean. Moving on, the Justice Department sues Google over digital advertising dominance. This has been a trend that's been going on for almost 20 years as well, with their dominance and large market share, especially with the European Union. They're always putting fines onto Google. So that was just the cost of doing business as a dominant market player. But it's never a good thing. It always does cost money. And what part of my argument today, thesis, is the competition for Google is a good thing because of this reason right here. So ChatGPT is definitely legitimate competition to Google, which I'll show you in a bit. I'll use ChatGPT and compare some of the questions and to Google. And I think it is a good thing that if they do give back some market share to Microsoft and potentially others as well, and that should lower the regulatory burden on Google and governments coming after them for being so dominant, and just for the overall internet economy and consumer. I think competition is good as well. So this has just been a cost of doing business to Google for a while, and as long as they keep that big dominant market share, which isn't going to go away anytime soon, this will always be one of their costs. Google's Bard is all the more reason to load up. So here we've got an author making a bullish argument, saying that the price coming off after Bard is a good buy the dip opportunity, and he's saying the company is more than a search engine, with YouTube's 2.5 billion monthly active users, Google Cloud growing, Google Play's 32% market share. It still remains the largest advertising company in the world. Mishaps like Bard might only fuel the company's speed and rate of innovation. As a result, investors should take advantage of this correction while it lasts. So he's saying based on valuation and buying the dip, this makes for an opportunity. We'll look at both bullish and bearish arguments for the stock, so we just kind of get a balanced view and try and not just play too hard on either side. This author is very bullish on the stock. He's saying Google versus Microsoft. One of these AI champions has 3 times better return potential. ChatGPT has become the fastest growing internet application in history, kicking off an AI hype cycle that has caused some investors to lose their minds. He goes on to say Microsoft is spending a lot on AI, but Google is spending far more and is expected to spend about $300 billion improving its AI tech through 2028. Both Google and Microsoft are likely AI champions of the future who will use their respective technologies to cement their strong positions in cloud computing. So I really agree with that point. I don't think, like most situations, it's not totally binary, win or lose. I think Google and Microsoft will both remain leaders, and I think Microsoft does now have a good chance at gaining some market share in search, which I like I said, I think is healthy for the industry and Google long term as well. So he's saying that there's an AI bubble, but it's likely pure hype, which I think there's some truth into. I think people getting a little too sure, ChatGPT is revolutionary, but I think it's getting a little bit overhyped, as we've seen in some of the smaller AI stocks. So I think there's some truth to that argument as well. This person's got a hold rating, saying Bing and ChatGPT will likely impact bottom line. Saying ChatGPT significantly boosted capabilities of Bing, and Google search should still have the upper hand thanks to its supporting ecosystems, but Google financials will likely be impacted due to increased competition. Okay, which I think is a fair argument as well. This author's bullish. Google, ignore the noise. Its AI is 3 times larger than ChatGPT. Google's Palm language model is close to 3 times larger than GPT at a staggering 540 billion parameters versus GPT's 175 parameters. And he goes on to say Alphabet stock is undervalued intrinsically. And basically, I think a lot of people are just kind of ignoring Google. They're kind of getting a bit too excited with ChatGPT, and they're not actually looking at what Google has been into AI for a while, and has, as seen here, they do have quite a big capability. So they will improve, and if not match, and maybe even exceed, ChatGPT's AI and chat capabilities and functions. It might take them a little while, but I'm pretty sure they will match, if not exceed, Google's. They do have the upper hand and experience with search for a long time. Can ChatGPT challenge Google's moat? Alphabet reported mediocre full-year results for fiscal 22, but still solid top-line growth. Google Cloud still got high growth rates. ChatGPT and other companies focusing on AI can be seen as increased competition for Google, but the strong moat will help Alphabet defend itself. Moving on, we've got another hold rating here. Finally, some competition for Google. Google's trading at 15 times full year 24 PE, and he's saying that's fairly valued. And so I think this is definitely a pivotal point in the search industry. Ever since Google overtook Yahoo, there's no one's come close to giving Google a run for its money. So this is definitely promising for Microsoft. Here we've got a bearish argument with an author with a sell rating. He's saying quick recovery unlikely. It's collapsed. He's saying that the fair value valuation has come down, which Wall Street has lowered as well. And we'll talk about a bit more about valuation in a later part of this video. But that's a fair argument to make as well. Google, another sell rating. Disruption is in the air. ChatGPT has the potential to disrupt many different industries. Many of these industries rely on Google. Google partly relies on them. We're talking about copywriters, coders, bloggers, for sure. ChatGPT threatens a lot of things. It's already creating problems with universities and the education sector with students using it to write their essays and assignments, and it's got a lot of applications. Doctors can use it to help, give the best treatment plans for patients. Especially in the copywriting and blogging industry, it can be easily used to generate content. Basically, just gives everybody a lot more capability. I think we'll all eventually have our own AI assistants, and this is kind of like the path towards that, starting with like a chat model. So for sure, this is competition. That's undeniable. Whether it changes Google's revenues a lot, that's the question and yet to be seen. ChatGPT highlights an emerging threat to Google's search business. Artificial intelligence may change the search landscape in a way that doesn't benefit Google. Certain tasks may migrate from being search-driven to being answered by AI-based tools. That is a really good point, because if you think about Google, is you ask it something and then it offers you up, most of the time it'll offer you up a list of websites. You've got to dig deeper to find what you're looking for. The trend is more towards just giving you the answer, and that's exactly what ChatGPT is. You don't have to go digging further into a website to find the answer. It'll just give it to you straight away, as I'll demonstrate shortly. So is Google still better? Like, a lot of Google's revenues is from its Google ad network, and that's the banner ads you see on most websites. They're from Google. So if we don't need to dig down into a website to find what we're looking for, that could actually have a pretty good headwind on their ad revenue. So it's whether they can, how many ads can they insert around a chat, inside a chat bot. I'm sure they will figure out a way. But that is hard when you look at other businesses like Meta. They haven't been able to really monetize Messenger and chat properties like WhatsApp really too well. It's more just the Facebook feed that they can really monetize the ads in. So that is a real thing to keep in mind. Okay, so let's look at what Wall Street thinks on Google. They've actually got a strong buy, 4.54 rating on the stock, and the average price target, 127, which is 35% upside. And you can see here, looking at a 5-year chart, and we'll just go down to 3-year chart, Google's persistently traded under Wall Street's average price target. So obviously the market has lower expectations on the business than Wall Street analysts do. There has been bigger gaps between the price and target before last year, but still reasonably good gap where we are now between $95 and $127 on the target. And over the last year, that's been trending down. So even though it's still strong buy, Wall Street is getting a little less bullish on the stock, but they seem to have found some sort of bottom here around the 125, 127 target. So looks to be moderating. Moving on to quantitative ratings. Quantitatively, there's also a strong buy at 4.5. Everything comes in at a pass except for profitability, which is A+, because Google, you could argue, has been one of the most successful commercial companies in history, absolute profit machine on search. And quantitatively, over the last month or so, that has trended up. We did dip down there for a bit, but quantitatively, the computer likes it. Moving on over to insiders, you can see there was a lot of selling going into the market top. Insiders just absolutely did really well on Google, really sold the top and the market, as they often do. We've even got down, even Nancy Pelosi sold her stock in Google. She always does pretty well. And we've had a few other insiders and people close to the company selling out as well. The only small buyers have just been a few congressmen, but that's nothing of any significance. Moving on to see what hedge funds have been doing. I've ranked it here by the largest positions out there. So the biggest positions have actually been adding. We had Wellington Management Group add 7 million shares a few days ago, and a few others. There have been some sells, but there's definitely been some dip buyers out there in the hedge fund community. Looking at traffic trends to Google, we can see that's actually trended up a little bit. 88 billion visits last month compared to 85 in November. And if we look at YouTube, that's actually holding strong and trending up a little bit. However, Gmail, that's come off a little bit, hasn't been getting as much traffic. And if we look here, here's a pie chart of their revenue. So you can see 58% of the revenue comes from Google search, and network is 11%. So that's their ads, and YouTube ads 10% as well. So still a really big ad-dominated business, even though they've got other things, which I'll show in a little bit. YouTube, I actually think, is their most valuable asset. Search, if Microsoft really catches up, then it's kind of become a commodity, and it's easily, changeable for a searcher. Especially if Microsoft feels, it's worthwhile making the investment to partner with the browsers and other devices and carriers for being the default search function, they might do that. And so I think it's likely Microsoft will increase their market share over the coming years. This is not just going to happen in the next couple of months or anything. But YouTube, I see a potential scenario in the next maybe at least 3, 4, probably 5, maybe 7 years that Microsoft really does take market share from Google, and Google search might actually start declining in revenue and growth, while YouTube is still ripping higher because they're absolute dominant video platform. And if you think about YouTube as a TV app, and it's a TV app where you can search for any content. Now you can buy TV shows, movies, the whole amateur TV content, like anyone create their TV show, I think is a really powerful thing, which they really dominate. And you think about like a TV app where you can save, share, playlist, and socialize, talk with others, and no ads if you want to go to premium. I think that is just going to grow and grow, and especially with amateurs, we can all find someone that we can really relate to on YouTube. I think that's a really powerful thing, and I see a potential in the future, maybe 5 or so years out, where Google's declining in growth, but YouTube's still growing, and then the market successfully calls for Alphabet to spin off YouTube into its own stock, maybe stock ticker YOUT, and then YouTube eventually becomes bigger than Google search. That's something I could see playing out, as crazy as that sounds now. Just a theory of mine. But Google does have a lot of other businesses. They've got Nest, they're into automated cars. They've got cloud. And we'll see here. Here's a list of all their products. Android, huge. Chromebook, Chrome. We all use Chrome. Drive, of course. Gmail. What else is the other big ones? Google Play Store. I mean, they're not going anywhere. They've got so many products. Chromecast. We use Maps, Translate, Sheets, Wallet. So they've got all these properties. Google's pretty much half of the internet, so they're not going anywhere anytime soon. Just maybe their search business has got some headwinds, which, like I said, I think is a good thing overall. But they'll pivot, and they've been trying to grow their other businesses for many years now. They realize they don't want to be so reliant on search. They want search to just be part of it. So they've been diversifying for many years now. They've seen this coming. They've got great AI technology. They will match GPT and exceed it if they haven't already. And they'll present it in a way that is really useful for the consumer. Going forward, just looking at the options market, we can see we're looking at the March regular expiry, third week Friday expiry March. We've got a lot of calls here, 70,000 open options at the 100 level. So we're just sitting at 94 at the moment. So that, I think, could act as a bit of a wall. And then we've got max pain higher at 99. So that could act as a bit of a magnet, but also a bit of a wall for those. Because market makers, the most amount of money they'll make is if the stock expires at 99 on the 17th of March. So that's something to be aware of. Now here's ChatGPT. I'll just give you a few examples. So let's just write design a 1 week meal plan for somebody who wants to lose belly fat. And here we go. Look at this. It just understands exactly what you want. You can ask it just about anything. And if we take this same thing here and just put this into Google, it just, like I said, it gives you a bunch of websites, and you'll have to go and find yourself what you're looking for. The thing with ChatGPT, it's trained on all data basically in the world up till 2021, so it can't give you current things like weather and sports results and things like that, but it can help you really educate it. I use it to help educate myself on new things I'm trying to learn. It can do so much. You can have a conversation with it. I could say back to this, okay, can you make me one but take out all the chicken? Or can you suggest something, how can I eat something sweet but with low calories? You can ask it to write you some code. Write me some JavaScript to make a little widget on my website. You just can ask it absolutely anything, and it really understands what you're asking it. And so that's really cool. And we can see on Bing here, they're starting to integrate it. I'm actually on the watch list for when they do integrate it. So there'll be inside Bing, there'll be a chat function. You can search and still find things on websites, but then there'll be talk with a chat bot. So they'll integrate that, and I think that might give Microsoft an excuse to invest in partners by being the default search on a lot of different browsers and devices. And this should help, but I think a lot of the hype out there is a bit overblown. Google's not going to just die overnight and Bing's going to take everything. And if the best case scenario I see is Bing getting up to 15-20% over the next 2-3 years with increased investments on becoming the default search, and that should be a good thing for Google. Okay, so that's a bit of the fundamentals and the bullish bearish argument. Let's go over to the charts and look at Google. So we can see here it came off really hard, down 4% on big volume after their AI presentation. And if you look at price action in Google over that time, Microsoft's been stronger. So there definitely has been a rotation out of Google into Microsoft based on that. That's without a doubt. And another thing is Google has actually, their last 4 earnings they've missed, which is quite a big string compared to their history. I think it was last in 2015 they had such a string of earnings misses. However, we could be finding a double bottom here in the Google stock price. If we look at Google versus Microsoft, and we look at a monthly chart, actually let's go to a 3-month chart. We can see from when Google first IPO'd back in 2004, they outperformed Microsoft massively right up until January 2014. Since then, Microsoft's actually outperformed them. However, it looks to have, on this spread chart of Google versus Microsoft, we look to have found some support and a double bottom down here. In other words, Google has stopped going down relative to Microsoft. So it's at a bit of a pivotal point here for Google stock price. And if we look on a monthly chart of the Google stock price, and we just draw a Fibonacci from the COVID low up until its high early last year, we can see we've done a 50% and a 62% retracement of this move, and looks to hold. Momentum's definitely stalled out. So this is the market trying to hold on to this uptrend. If we were to break down through this level, you could say that this bull trend is over and we're into something different now. So if we just look on the weekly chart here, and we really need this level, we'll just go to a 2-week chart, be a bit easier. We really need this level around here to hold. So that's about the 85 level. Apart from that, we need what the next one we'll be looking through to break out to get some sort of confirmed uptrend would be this level around here, where we've had a lot of turns before. So a breakout of 105. Okay. If we go over and look at our fundamental chart, you can see our stock fair value indicator's actually got it at $89, and business quality score still 9, still really good, but valuation has dropped down as expectations of future cash flows have been discounted by Wall Street. And so Wall Street's future earnings expectations goes into our stock fair value indicator and expected growth rates and balance sheet items. So just going back to this other chart, there has been a lot of congestion in the stock price. If we draw a fixed range volume profile from their Q3 earnings, we can see the point of controls at 94.35, right where we're at now. So most positions out there since that earnings, this sideways movement, they're about break even. If we go above this, most positions in this time will be profitable and the stock should hold. Below that, people might start showing losses and starting to get out. It's hard for the next resistance we need to go. There's a lot of resistance at this 100. And like I said, there's a lot of options at that 100 level. And if we draw a line here, we can see it's already turned a bit. And 600's a big psychological number. That's definitely going to be the key overhead resistance on this stock. So there is a lot of there is headwinds for sure, with growing competition from ChatGPT, plateauing growth, and they got regulators always breathing down their neck, but they do have a lot of good things going for them, with Chrome, Android, Gmail, and the big one, the most valuable asset I love about Google is YouTube. I mean, I wouldn't even be talking to you guys now if it weren't for YouTube and Google. And I've got a lot of experience. So I've been, actually using Google as a consumer for over 20 years, since 99, and I've advertised a lot with Google for over 15 years. So I've spent a lot with them, and I've advertised with Bing, and I've always been a big believer in Google and what a great company it is and going forward. And I know they're going to be around for many more decades. And they've just got some healthy competition here, and it could be like the whole IBM Watson thing, if you remember, and that was just totally overhyped and overblown, and IBM's kind of just fallen flat. So I don't think Microsoft's going to steal the lion's share from Google anytime soon. If anything, they'll just help the industry overall and AI and for the consumer. But with their plateauing growth and this price action is really hard, bearish moves down here. And with everything out there, it's hard for me to get overly bullish right here and right now on it. I think we are sitting pretty much right around at fair value considering everything. I would be surprised if we took out this low here, barring any market crash. If the market holds up, I would be surprised if Google started trading down into the low 80s and into the 70s. That was everything else being equal is probably a great buying opportunity. But for now, right here, right now, I'm just going to give it a market perform rating, which I believe will be performing in line with market. And I'm going to give it a slight premium to our fair value at 89. I'm going to give it a slight 10% premium and just put price target of 100. So I know that's not too exciting and too much different from where we are now, but that's honestly where I'm comfortable at being on Google stock right now. So overall, they're definitely not going anywhere. I still really like the company, and I think they could actually come out on top with this whole AI thing. But overall, it's probably a good thing that they give back a little bit of search market share to others going forward. Okay, I hope you found this useful into Google, and if you're interested in using these same indicators that I've used here to analyze the stock, just head over to clickcapital.io and go to our indicators page, and you can get these indicators for TradingView today. And you can see we've got trend candles here. They've actually just gone bullish on the daily chart actually on Google. And seasonality is another one. We've got 30 bars. So over the next 30 days, seasonally Google increases a little bit over that time. But you can see on our range strength indicator, price has been ranging and stalling out here. So for it to get into a new uptrend, we really need to take out this 105 and 110 levels. But for now, it looks stuck right in the middle of congestion and could do for many more months to come. Okay, thanks for watching, and stay subscribed, and we'll keep you updated on Google. I'll try and do one every month on this stock, and as this is a dynamic unfolding situation, we'll see what happens going forward. Thanks, guys.